The worst week since the global financial crisis. Markets around the world are on the retreat as fears of the coronavirus continue to spread. Is the global economy prepared? Also coming up, deal or no deal. England may be out of the EU, but the business of Brexit is only getting started. But does London actually want a trade deal with Europe? Welcome to DW Business. I'm Monica Jones in Berlin. Good to have you with us. Investors are on the retreat worldwide as fears of the coronavirus deepen. Supply chains are starting to falter and tourists are staying at home. As the business community struggles to predict the coronavirus's economic fallout, observers warn the virus could be the final blow that throws the world economy into recession.
Markets around the world are sinking fast. It's the worst week in a decade for global stocks. And investors in Hong Kong aren't the only ones seeking safer territory. In the US, traders could only watch on as the Dow Jones suffered its worst single-day drop in history on Thursday. As the coronavirus continues to infect more and more countries, so does its negative impact on economies around the world. This is Milan in northern Italy. Normally busy tourist hotspots are deserted and restaurants are empty. The International Monetary Fund says it's still getting to grips with how deep the global effect will be.
The virus is going to have an impact on growth. A lot just depends on the speed of recovery in China, in other countries, the spillover effects, the effects on supply chains.
With concern about both the economic and health implications of coronavirus growing, governments are looking for global solutions. But experts warn that the world is not prepared for what may be to come.
So here's just a roundup of some of the most dramatic market action we've seen over the past hours, starting with unprecedented losses on Wall Street, where the Dow Jones had its worst one-day point drop in history, tumbling almost 4.5%. Now, that sentiment spilled over to Asia, with Tokyo's Nikkei shedding 3.6% today, and Hong Kong's Hang Seng also closed down 2.4%. Now, for more, let's cross over now to Chelsea Delaney, our financial market correspondent in Frankfurt, because Germany's DAX is also in a tailspin. Why are markets reacting in such a strong way?
That's right, a total tailspin here in Frankfurt. The DAX was down as much as 5% earlier. It's bounced a little bit, but investors are really just confronting a steady stream of really negative news. Every hour there's a new report of new cases in Europe, of new business closures, of disruptions. Switzerland, for example, just announced it's canceling all large public events. That's going to hit really crucial business gatherings like the Geneva Motor Show. So I think investors are really struggling to sort of assess what this impact is going to be. And they're having to sort of struggle with these questions of, are there going to be more production shutdowns? Are there going to be other quarantines? Are consumers going to stop spending? And those are all really, really difficult questions to answer. And I think there's also the compounding factor of we sort of came into this week with a lot of complacency. Stocks were at record highs as recently as last week. So investors really had not been prepared for a global pandemic like this.
So this came as quite a shock, and now there's a lot of uncertainty. And the man who predicted the financial crisis, economist Nouri Roubini, he says that the worst is yet to come. How much worse can it get?
I think, at this point, investors think it can get a lot worse. They're bracing for certainly more volatility, and I think that's one reason why you're seeing stocks sell off so much today. Nobody wants to be holding stocks going into the weekend because we don't know what's going to develop over the weekend. But a lot of investors are comparing this to the financial crisis, where you just didn't know what was going to happen and what the world was going to look like the next day. And this is really putting the onus on central banks and other policymakers, but a lot of investors are right now looking at the potential for global stocks to fall into a bear market after 11 years of gains. The DAX here in Germany is about 5% away from a bear market. So it looks increasingly like this could turn into a longer route for global financial markets.
All right, Chelsea Delaney there. Thank you so much for keeping us in the loop on what's happening on financial markets and in particular in Frankfurt right now. Thank you. Now, British Airways says it's expecting a drop in profits this year due to cancelled flights off the back of the coronavirus. Now, many planes in the BA fleet are currently grounded. Flights to and from China, Italy, Singapore and South Korea have been cancelled. Normally, BA's holding company, the International Airlines Group, would expect to forecast profits at this time of year. But that's not currently possible, it says, because the duration and potential effects of the coronavirus crisis remain unclear. Well, now to an unexpected turn of events in Volkswagen's long-running diesel emissions scandal. The German carmaker says it's struck a compensation deal with domestic consumer groups, representing hundreds of thousands of diesel car owners deceived by VW. Further details will follow over the course of the day. The deal affects around 400,000 customers. Earlier this month, initial negotiations between the two sides broke down, with both groups blaming each other. Post-Brexit, trade negotiations are set to begin next week. The EU says a deal is possible if both sides agree to stick to promises made in the run-up to Brexit. Brussels hopes to preserve a level playing field of standards and regulations across the continent. But London has indicated it may not play ball.
To speak of the negotiations,
it's better to have no deal than to compromise. That's the message coming out of London.
At the end of the transition period, on the 31st of December, the United Kingdom will fully recover its economic and political independence. We want the best possible trading relationship with the EU. But in pursuit of a deal, we will not trade away our sovereignty.
Sovereignty. Britain wants to make decisions without being forced to abide by EU regulations, one of the main arguments of Brexit supporters. But Brussels insists that there will only be a free trade agreement if Britain continues to comply with European standards in the future.
We want competition in the future, but it must be fair. Fair and free. Free and fair.
The EU is demanding that worker protection, environmental regulations and tax planning meet EU standards. British Prime Minister Boris Johnson says that's absurd.
The whole objective of doing what we're doing is so the UK can do things differently and better. We're not going to engage in some race to the bottom. We're going to maintain the very highest standards. All we want is mutual recognition of each other's high standards and access to each other's markets.
If there's no agreement by June, Britain is threatening to cancel all negotiations. And Brussels has also signaled that it's prepared if the two sides fail to seal a deal.
And it feels like we've been there before many times. Let's bring in Erdal Yalcin, Professor of Economics at the University of Applied Sciences in Constance. Good to have you with us. So London is yet again threatening to walk away. What do the Brits really want?
Well, Boris Johnson presents himself as a strong trade negotiator, and he pretends to have a very clear idea how the agreement should look like. And he referred explicitly to the deep and comprehensive free trade agreement between the EU and Canada as a rule model. The problem with his vision is that the UK is by far not in the same bargaining position as Canada has been. And as long as Boris Johnson is not going to accept this reality, I'm afraid to say that we cannot expect real progress in the trade negotiations.
Well, is there any point starting talks on Monday then, given those positions? And if there is a point starting talks, should the EU make concessions?
Well, I mean, there is a structural problem in the case of the UK. And I think it's easy to understand to see how negotiations work, staying in the example of Canada. When the EU negotiated with Canada, there was a clear reference point how restrictive the Canadian market is, how law enforcement, how electricity supply is regulated. And based on this reference point, negotiators could basically bargain for reductions and had an idea of what would happen if there is no agreement. In case of the UK, this is a fundamental difference. We do not have a real outside option on the UK side. Boris Johnson refers to a so-called no trade deal scenario if no agreement is achieved. What does this mean? There are very critical rules under the WTO rules. That would be the no trade deal scenario, which are not regulated. Access to fishery, regulation of medical, the medical sector, pharmaceutical sector, and so forth. That means he tries to build up a threat scenario with a no trade deal scenario, but the truth is we don't know how this legal framework will look like, and that puts the UK into a very weak negotiation situation.
Now, the time for a trade deal to negotiate one was very short anyway. What happens if talks fail and Britain actually leaves without a deal in June?
Yeah, basically that is a very huge uncertainty. Realistically, I'm very pessimistic. I expect that there will be an application for prolongation. If there is no agreement, to answer your question straight, there will be an unregulated range of questions, creating uncertainty for investors, for trade, and this will hit the UK market. This is the truth. There is no need to pretend that the UK can regulate things without a deal. That is simply not true.
All right, Professor Erdal Yalcin there, Professor of Economics at the University of Applied Sciences in Constance there. Certainly going to be interesting to keep an eye on those talks should they set place on Monday. Thank you so much for your insights.
Thank you.